Chairman. First of all, Mr. Ahrensmeyer, I completely agree with you. Whether you realize it or not, I wasn't a big fan of the tax reform, particularly in its initial state, because we were making a huge disparity between C Corps and pass-throughs. So I'm the guy that held out to make sure that we got some measure of relief for pass-throughs. It's not the way I would have done it. I guess what I want to talk about, I think, first of all, I want to thank the Chairman for holding this hearing, and I want to point out, I think there's potential for a lot more agreement on this issue than there is disagreement. Part of my frustration here in Congress is no matter what issue you're talking about, whether it's health care reform, PBM reform, tax reform, I'm always looking at whatever piece of legislation is being proposed as just another Band-Aid on top of a dying patient. I mean, our tax system is a mess. And so I guess what I want, the chairman, colleagues, the witnesses, I'd like people to think outside the box. And I hate the term tax reform. One of my favorite sayings is all change is not progress, all movement is not forward. Just because you're reforming something doesn't say you're making it better. In the end, I voted for the tax bill because it was better than what we had, and it did stop inversions. It did attract, profit back on shore, but it's far from perfect. So I would like to go back to a clean sheet of paper, and how do you design a simple and rational system? And I'll just throw on the table, start with the concept that income is income. I mean, it is just bizarre that we take a look at a different entity, we're going to tax you at that rate versus an individual tax at that rate. In terms of capital gains, rather than just pick a rate out of the air, why not index to inflation to really account for and then tax it at a normal rate? So, I actually did during 2017, the lead up to it, I had my own tax proposal. I called it a true Warren Buffett tax. And the basic concept is you just turn all businesses into pass-through entities. You tax income at the shareholder level. You tax it once at progressive rates. I mean, I'd like to see a flat tax rate, but I think that ship has sailed. I'm not utterly opposed to progressive tax rates, so some measure of fairness, as long as it doesn't, exceed a certain threshold. Most Americans don't believe that the federal government should ever take more than 30% of anybody's income. So I guess I would just like to ask all of the witnesses, if you were looking at a simple and rational tax system, what would be the first thing you would look at? What would be the first thing you'd eliminate? Again, I would eliminate C Corps, and I'd turn them into pass-through entities and tax all business income at the shareholder level. And I'll start with you, Dr. Klausing.
I agree that I think we can have a much fairer, more equitable, and more efficient system if we focus on differentials between types of income rather than keeping the rate particularly high. On the individual side, that would mean more uniform rates between labor and capital. On the business side, I agree that we should avoid distortions in organizational form and tax all large businesses similarly. But we should also try to avoid big preferences for foreign income relative to domestic income. And by reducing those rate differentials, we can keep the overall rates high while still raising enough revenue to run the government.
Let me interrupt. When I said income is income, there wouldn't be differences. Everything would be taxed at the same rates. We'd figure out how to do that. Mr. Hausman.
Yeah, I think for our union, the concept and key piece for this discussion was really this idea that we provide incentives through the tax code to outsource. And I think this idea of adjusting revenue, making sure that American-based companies like paper companies in Wisconsin, like Graphic Packaging Corporation of America, who are domestic firms, are not having to compete against global players at a rate that on the tax side, so that they're doing this weird competition. So I think for us, the union, we see, as you say, somewhat simplification, but ensuring that our international tax system actually generates the revenue similar to what we try and generate here from our American companies.
Again, understanding that competing overseas that adds a new complexity. I mean, if we just had, our country, that's all we had to worry about. I mean, now you have to have businesses compete overseas. Mr. Ahrensmeyer.
Well, absolutely evening out the rate would do a lot. I mean, I don't know if you're proposing to actually have capital gains and ordinary income rates be more closely aligned. We would agree with that. I do think there's some practical issues of taxing shareholders who are shareholders of big multinational corporations.
It's eminently doable. We got computers now. We talked to the shareholder services. We do far more complex things than what you're contemplating, Senator.
I would be interested to hear the reaction of a number of people, the primary shareholders in these corporations to that. But in theory,
well, let me just quick say, you know, if the beauty of this scheme is if you are a low-income worker, the way you collect the taxes through a withholding. The corporations will pay the tax for the shareholders. So if you're a low income taxpayer, you'll get a refund then over that backup withholding. If you're Warren Buffett, you're going to put more pressure on corporations to pay dividends, which would help reallocate capital through the economy. So again, there's a lot of, but plus I would assess income based on cash based. So you can get rid of all these other, you know, amortization, depreciation. It's cash income. You know, a foreign tax paid is a deduction, not a tax credit. I mean, there's so many ways we can simplify this, and that's what I'm asking people to do. Dr. Hines.
Senator Johnson, I think you should look into options with a value-added tax. A value-added tax does a lot of the things you just described. It taxes income comprehensively, and it taxes it at a common rate. The one thing is it only taxes the income when people spend it. So you have to wait until then. But people do eventually spend their income. More than 150 countries have value-added taxes. They raise revenue, they do so efficiently, and it's an alternative that is really worth thinking
They raise a lot of revenue because they put it on top of other things. Professor Hertzfeld.
Yeah, thank you. I want to focus on your question, your point, income is income, and one of the large sources of complexity in our code and also arising from the global minimum tax is that we now have multiple definitions of income. So we've got our historical tax code definition of income, but we've got the corporate alternative minimum tax that has another, looks to financial statement income, and then we've got the global minimum tax that requires U.S. companies to now compute their income under that definition of financial statement income. And so having a single uniform definition of income would go a long way.
Okay. Thank you, Mr. Chairman.
Thank you, Senator Johnson. Our order at the moment is Senator Padilla, followed by Senator Braun, followed by Senator Merkley, followed by Senator Kane. Senator Padilla.